There never was a petrodollar agreement that could be expiring, and there is no imminent threat of de-dollarization. All of this was fake news that's been spreading across social media this month. Hello, members, super savers, and bond course fans. I hope you're healthy and well. So this is the petrodollar video that a majority of you asked for when we took this poll. We get requests for many different video topics. Some are directly bond related and some less so. But when we get the same ask repeatedly over the span of a few short days, this usually piques my interest. The petrodollar request was one of these questions because, well, much of what we found at first was only on social media, and even worse, just fake news. As I already stated at the very start of this video, there never was a petrodollar agreement between the US and Saudi Arabia that could be expiring, nor is this the beginning of the end of the US dollar. But that said, this little storm on social media did shine a light on some corners of the global markets that can be important, but are also complex and often misunderstood. And I felt it might be of interest to our community to dig a bit deeper here. So, with that in mind, here are the 3 topics that we'll be covering in today's video. 1. What is the petrodollar? 2. What agreement do the US and Saudi Arabia really have, and why? For the lifelong learners, educators, and history buffs in our community, you'll find this section of the video and our personal encounters here particularly interesting. And 3. What does this mean for you? As usual, here's our front of video disclaimer. For a detailed disclaimer, please refer to the end of this video. Let's dive in now, folks. As I've explained before in this video on the dominance of the US dollar in world trade and finance, the dollar is not just the national currency of the United States. It's also the preferred means for doing international business across the globe by a margin. But more on this later in the video. By necessity, this means that at any given point in time, a lot of dollars are being used or held outside the United States. And to capture this phenomenon with a catchy shorthand label, many of the US dollars that circulate outside our country often go by other names. 2 of those other names you'll frequently hear are petrodollars and eurodollars. Petrodollars are crude oil export revenues from other countries denominated in US dollars. For example, when a US company pays Saudi Arabia in US dollars for the oil that it's buying, the US dollars that Saudi Arabia receives and that now belong to them are known as petrodollars. Moving on now to eurodollars. At its core, eurodollars are US dollar denominated deposits held outside of the US, either at foreign banks or at the overseas branches of American banks. For example, let's take these petrodollars that Saudi Arabia now has in its possession after it got paid for its oil exports. When Saudi Arabia deposits petrodollars into an account in a London-based bank, that's these petrodollars here, Saudi Arabia's petrodollars become eurodollars, so to speak. Or you could even say they are now both petrodollars and eurodollars if you want. But the name game doesn't stop there. Let's now assume that Saudi Arabia uses its eurodollars to buy technology from Microsoft, Apple, Nvidia, or any other American company. When Saudi Arabia uses the eurodollars from its account in London, the same dollars that were initially petrodollars, mind you, so when Saudi Arabia wires eurodollars from London back to the US to pay the American company, these dollars come back into the United States and revert to being just US dollars again, without any special label. What we see from this illustration are 3 things. 1. A US dollar can move outside the US to become a petrodollar and a eurodollar, and then return back into the US and revert to being a normal US dollar again. 2. These names, petrodollars and eurodollars, basically describe how US dollars are used outside of the United States. 3. A dollar is a dollar is a dollar. So petrodollars, eurodollars, They are all real US dollars, the same dollars that you and I use in the grocery store to buy our bread, milk, and eggs. So, now that you know what petrodollars are, let's move on to the so-called PetroDollar agreement from June 8th, 1974, that some on social media say has ended and will eventually lead to the ultimate death of the US dollar. A petrodollar agreement that, as I mentioned at the very beginning of this video, never existed in the first place. We're going to travel back a bit in time to better understand the agreement, or to phrase it more accurately, the cooperation statement the US and Saudi Arabia really did agree with one another on. And it's a story of oil dominance, dollar dominance, and both broken and repaired friendships. To understand what I mean, we need to dig into past world events a bit deeper than we normally do here at Diamond NestEgg, but it will help you understand the international role of the dollar and any threats to it a bit better. So, on October 6th, 1973, the Yom Kippur War broke out when Egyptian and Syrian forces launched a surprise attack on Israel on the high Jewish holiday of Yom Kippur. The Yom Kippur War is sometimes also known as the October War outside of Israel. On October 12, 1973, Nixon, who was our president at that time, ordered an arms airlift to support Israel. Basically, we delivered weapons, ammunition, etc. for Israel to defend themselves with. On October 17, 1973, Arab oil producers cut output by 5% and promised to keep cutting by 5% every following month while maintaining oil supplies at previous levels to friendly states. And they seem to have kept the definition of a friendly state a bit vague to give themselves some room for maneuver. Between October 17th and October 19th, 1973, President Nixon met with Saudi Foreign Minister Omar al-Sakaf in Washington and promised that the United States would mediate a settlement to the Yom Kippur War that would be peaceful, just, and honorable to both sides. The foreign ministers of Algeria, Kuwait, and Morocco were also in attendance. Saudi Foreign Minister Sakaf reported back to Saudi Arabia's King Faisal that President Nixon had said that he had ended the Vietnam War on a peaceful, just, and honorable basis, and now intended to end the October War in the same manner. On October 19th, 1973, so on the same day these meetings here ended, President Nixon sent a request to Congress for a $2.2 billion arms package for Israel, which was promptly approved. However, this new $2.2 billion arms package, coming on top of the previous arms airlift, did not go down well with Saudi Arabia. And so on the next day, on October 20th, 1973, Saudi Arabia's King Faisal imposed a total embargo on oil shipments to the United States, to be joined by most other oil-producing Arab states. It's important to note that King Faisal had initially been opposed to a total embargo and only agreed to the 5% cut here on October 17th under pressure from other Arab states. But at this point, he felt his efforts to remain on friendly terms with the United States were not being appreciated in Washington, because this $2.2 billion arms package that was approved by Congress, King Faisal had understood that Israel had initially only asked for $850 million worth of American weapons, and that President Nixon had on its own initiative added the difference of $1.35 billion on top. In a nutshell, King Faisal perceived the unsolicited $2.2 billion worth of weapons from our government as a sign of America's pro-Israeli slant in foreign policy. And to add insult to injury, it seems that King Faisal felt President Nixon had been duplicitous in his promise of a peaceful, just, and honorable settlement that would be fair to both sides, a promise that had been made right before Nixon sent the $2.2 billion request to Congress. Now, that's what we could find in the sources, all linked in the first pinned comment below. And there were clearly other factors in play as well, such as the ongoing Cold War between the US and the Soviet Union, which was sending substantial arms and support to the Arab countries fighting Israel. Plus, to make it even more complex, President Nixon was at the deepest depths of the Watergate crisis at the same time, and might not have given world events the full attention they clearly needed and deserved. For those of you who still remember these tumultuous days, this same October 20th, 1973, was also one of the worst days of the Watergate saga, the day of the so-called Saturday Night Massacre, when Nixon tried to get Special Prosecutor Archibald Cox fired, which in turn triggered the resignations of both the U.S. Attorney General and his deputy. So clearly, October 20th, 1973, goes down as one of the darker days of U.S. history. But back to oil now. As a result of the embargo, the price of oil quadrupled from $3 to nearly $12 per barrel by early 1974, and then kept climbing some more. This was before my time, and I'm dating my husband here, but Marcus claims it's one of his earliest childhood memories. He can still remember the days of the ensuing oil crisis. In Austria, where he grew up, the government imposed one car-free day per week. And each car had to put a sticker on the windshield saying which day of the week they would not drive. The police enforced the non-driving rules and issued a fine if they caught a car with a Monday sticker on the windshield out on the roads on a Monday. Let's continue with our timeline now. Between October 25th and October 26th, 1973, a ceasefire ended the October War's major battles. Some lower intensity operations did continue into early 1974, though. On March 18th, 1974, Saudi Arabia lifted the oil embargo, but the effects lingered throughout the 1970s and oil prices stayed high. This was also the time when the U.S. and Saudi Arabia started to repair their relationship from the nadir of the oil embargo. And in one of the steps of the process, between June 6th and June 8th, 1974, a Saudi delegation visited Washington to continue improving the Saudi-U.S. relationships. At the conclusion of this meeting, on June 8, 1974, U.S. Foreign Minister Kissinger and Saudi Arabia's Prince Fahd issued a joint statement of cooperation. That's this joint statement on Saudi Arabian-United States cooperation here, announcing a wide-ranging military and economic cooperation that both said heralded an era of increasingly close cooperation, as the New York Times reported on its front page the following day. Now, this joint statement from June 8, 1974, seems to be at the root of the fake news about a petrodollar agreement. But what does it really say? Well, the two governments set up two joint commissions, one on economic cooperation and the other on Saudi Arabia's military needs. And several working groups were established within the structure to improve cooperation between the two sides, including industrialization, manpower and education, agriculture, technology, research and development, as well as cooperation between the Treasury and the Saudi Arabian Ministry of Finance in the field of finance. Basically, the two governments decided to be friends again with this piece of paper. And a fun fact for those of you who buy treasuries at auction, according to one of our friends who was in one of these working groups back in his day, cooperation between the Treasury and the Saudi Arabian Ministry of Finance initially meant educating Saudi Arabia on how to buy treasuries at auction with their petrodollars, helping them invest all the US dollars they were now flush with as a result of the much higher oil prices. So yes, the Saudi Arabian Ministry of Finance had to learn how to buy treasuries at auction, just like many of you in our community did. Except that back then, there was no YouTube, nor was there any Diamond NestEgg step-by-step tutorials. So working groups it was. And in the beginning, it seems to have been as confusing for the Saudi Arabian Ministry of Finance as it was for some of you. And they initially couldn't believe that even the largest buyer couldn't negotiate a little discount. But to give credit where credit is due, the U.S. Treasury remained steadfast. And then, as now, everyone got the same price at auction, from the largest buyer to the smallest buyer. In any case, as I said before, this joint statement on Saudi Arabia and United States cooperation from June 8, 1974, this seems to be the petrodollar agreement that many on social media have been referring to, except that it's not a petrodollar agreement. 1. This joint statement of cooperation was not a formal treaty between the two nations that can expire or not be renewed. 2. This joint statement of cooperation did not establish the dollar as the currency for oil sales. In fact, oil was mostly priced in US dollars before the oil shock of 1973, during the oil shock of 1973, and has continued to be priced in US dollars ever since. And yes, even during the time when Saudi Arabia refused to sell oil to the US, they were still pricing their oil in US dollars. Another fun fact, the countries that price their oil in different currencies from the US dollar, such as Russia, Iran, and Venezuela, they do this because they have to. These countries have abandoned the US dollar not out of a position of strength, but out of necessity, as they are cut off from the US dollar network by the US, and they pay a price for it when they sell their oil to other countries in non-US dollars. These prices are not transparent, but are presumed to be at a discount of 30% or more at times to published dollar prices. The reality is that Saudi Arabia and all the other non-sanctioned oil producers price their oil in US dollars and will likely continue to do so for the foreseeable future. More on this in the next section of our video, though. Moving on to point number 3. This joint statement of cooperation actually did not mention any word of oil or petrol at all. Of course, the U.S. made no secret of the hope that this step towards being friends again would also in turn get Saudi Arabia to increase oil production and bring down oil prices. In a way, this joint statement of cooperation worked as intended, contributing to a normalization of relationships between the U.S. and Saudi Arabia, and a slow but eventual stabilization of the oil market again, bringing prices down after the October war, at least in inflation-adjusted terms. And this, my financial friends, this is the real story behind the petrodollar agreement that never existed, and the fake news that Saudi Arabia had abandoned the dollar. Despite what some fearmongers may want us to believe, abandoning the dollar would be no easy task for Saudi Arabia, even if they wanted to, which is a nice segue into the next section of our video. Now that we're all well versed in petrodollars, eurodollars, and the fact that there is no official petrodollar agreement, there are 3 additional key learnings for today. Key learning number 1. The US dollar is the most important currency on the globe by a distance. According to the Atlantic Council, the US dollar makes up 58% of global foreign exchange reserves, 54% of export invoicing, and 88% of foreign exchange transactions. And the share of export invoicing for the dollar is even higher in the Americas and Asia Pacific, where the dollar dominates with a 75% plus share. Only the Eurozone, naturally, invoices trades among itself, let's say between France and Germany, in their own currency, the euro. There's also no sign of dollar dominance receding anytime soon if we look at this index of international currency usage. This blue line is the US dollar. And when basically everything on world markets is priced in US dollars, this creates a network effect that is hard to change because it would be very costly and disruptive to do so. As I mentioned earlier, abandoning the dollar would be no easy task for Saudi Arabia, even if it wanted to. But it doesn't look like they want to abandon the dollar anytime soon anyway. Did you know that since 1986, Saudi Arabia has pegged its own currency, the rial, to the US dollar? Meaning that for the past 38 years, the rial has traded at a fixed exchange rate of 1 SAR to 0.2667 US dollars, with some minor fluctuations. And note that on this chart, a temporary change in the exchange rate of 1% from about 0.2667 to 0.2690 already looks like a massive spike. Going off this peg and or starting to price Saudi oil exports in other currencies than US dollars would have the potential to create a self-inflicted currency crisis for Saudi Arabia. And that is the US dollar network effect at work, because no sane country has the appetite for the disruption, volatility, and maybe war that would entail. Remember the first half of the 20th century, when the transition from the British pound to the US dollar as the world's currency happened. This was in the wake of one Great Depression and 2 world wars. Key learning number 2. Because the dollar is so dominant, there are always some people out there with an interest in forecasting the imminent demise of the US dollar, even if that means speculating and doomsaying about a petrodollar agreement that never existed. There is no doubt that the US dollar's pole position as the world's reserve and trade currency, it does give our country a tremendous edge in managing our finances, and we would probably see strong repercussions if the US dollar ever lost that position. I just don't expect to see that happening in my lifetime, given all the data we've just walked through and network effects we've talked about. So the next time you see a death of the dollar video or article, remember to take it with a grain of salt and come back here to our channel to check in and to see what the real numbers actually show about the prospects for the dollar across the globe. Key learning number 3. All this should not leave you with the impression that there are no factors that could threaten the global dominance of the dollar. However, in our view, the main risk to the US dollar remains more domestic than international, meaning, say it with me, our growing budget deficit and pile of debt, which are not sustainable in the long run. That is what we need to get back under control, or the dollar will be experiencing a severe crisis at some point in the future. But as I've said before, it's up to us, to Washington, to control whether that will happen. In other words, the dollar's continuing dominance, its strength, and its potential weakness lie more within our own country, in our own hands, than it does with some other countries overseas. As always, I hope you enjoyed this video and learned something new. And if you did, and want to get back to bond investing and how to build a bond portfolio while rates are still attractive, then check out this video here on our 2 recently launched bond courses. I've also included the links to our bond courses and YouTube Super Saver membership below this video for your convenience, especially if you want to continue the dialogue at one of our upcoming live sessions next month. All right, members, Super Savers, and bond course fans, see you again very soon with more brand new wealth building content for your financial journey.